Hi everyone, welcome back to Alpha Trail. Hope you're all having a good time. Let me first of all wish you a wonderful year ahead. Today, we are going to look into Pylon Gateway Fund that'll soon be launched by Pylon Protocol. The Gateway Fund will focus on funding early stage projects through collective treasury swaps that are backed by yields which are generated from the deposits. Let's explore it further. A quick disclaimer before we start. This video is only for education and entertainment purpose only. Please consult your financial advisor for any investment related activities. What is Pylon Protocol? Pylon is a collection of savings and payment services in the Terra blockchain. The basic idea of the Pylon is to provide a riskless investment by depositing money and spending yields. This is enabled by making use of the stable 20% APY generated from the Anger protocol. There are three broad categories in which they operate. One is the Pylon Gateway, the second one is a Pylon web app, and the third one is a Pylon widgets. The Pylon Gateway is a launchpad for other decentralized projects on the Terra network. The startup DeFi projects can use Pylon to start up their operations. The projects launching through the Pylon Gateway uses various modes for fundraising, which includes Pylon swaps, Pylon pools, or even liquid Pylon pools. Pylon web app allows users to trade and stake mine, provide liquidity, also allows to vote on community governance proposals. For the Pylon widgets, deposit with Pylon widget in which any crypto-friendly subscription-based merchant can integrate into their payment system. The existing Pylon swaps with the Pylon protocol faces several issues. One of the key issues with the Pylon swap currently is the issue of scalability. As we have seen, there's a huge demand for new protocols launching through the Pylon gateway. The protocol continues to grow exponentially. This is despite the demand for new project tokens on the part of the users. We have seen that there is a lack of sufficient allocation to meet this demand immediately. So what many of the launchpads have resorted to is by introducing low quality projects. This is a very short-term oriented approach which is not sustainable in the long term. The second major issue is that for previous IDOs through Pylon Swap, we have seen bots playing a major role, wherein we have seen first come, first served sniping by the bots. They were seriously challenging retail investors who are left behind with high prices. Considering the long-term incentive alignment for the community, Limo Wuj, who is a co-founder of Pylon Protocol, has proposed a gateway fund that is sustainable over the long term, which accrues value for the stakers and depositors as against simply rending liquidity and distributing LP incentives. So let's understand what exactly is Pylon Gateway Fund. It's a community fund that accrues depositor yields and bears a liquid derivative token for that. So here the UST deposit is preserved in full with yields buying up various project tokens at a pre-fixed price. So basically what it does is it provides a very attractive method for users to hold their stable coins on Terra while earning their yields through a set of emerging project tokens at the lowest fixed price points. So it basically not just a capital preservation method, but it also helps in capturing the upside of the tokens. Here you can see the recent gateway page on the Pylon Protocol website. The page is not live yet, as it is expected to be launched in the coming days. For participating, you can see that you need to burn some mine tokens to deposit UST funds into the liquid pools. Here you will receive the DP token GFI in return. By holding this token, users will receive retrospective linear airdrops pro rata to amount and the duration held. Now the UST deposited has a vesting period, that is a lockup period of 24 months. You can claim that underlying UST by redeeming it with a DP token. That represents your share or stake in the pool. We'll discuss in detail in the coming slides. So basically, there is some difference between a Pylon treasury and a gateway fund. They are both different. The Pylon treasury, which is also referred to as the Pylon community fund, is designed to provide grants for various things like community initiatives, hackathons, ecosystem partnerships, etc. Whereas a gateway fund, the main idea is to attract its own set of funders and backers to meet needs that are specific to ideal participants of the Pylon Gateway, the Launchpad platform, through the treasury swaps and airdrops. So the purpose it serves are different in both the cases. So let's see how it works. Users deposit USD into the gateway fund. The yields generated from the underlying principals are pooled into the fund to buy project tokens in the future, which are then distributed retrospectively. The project tokens are bought at a fixed pre-sale price. It is not just bound to a single project, but allowing them to invest in a number of different projects all at once. Now, for the depositors, they are able to make lossless deposit in USD by burning mine token at a fixed ratio and receives a tradable DP token, GFI, which allows them to exit their position at any point of time. Now, for the users, the project tokens are distributed either linearly per block or periodically airdropped in lump sum, pro rata to the amount and the duration of the USD deposited, resembling the current airdrop distribution, which is currently followed by the Pylon web app. Now, for the projects, the crowd-funded USD yields will be distributed over time. But these are subject to the community review and votes of non-confidence on the Pylon governance. There is strong incentives for stakers who are actively engaging in the governance. Here, for participating in the Gateway Fund, there's a stricter entry standard compared to the regular Pylon pools. It basically enforces an entry fee with a mine burn. Now, for a user to deposit 10 USD into a Gateway Fund, they must burn one mine, and in return, they receive a DP token which is easily tradable. In terms of the USD deposit, it is locked for 24 months, but at the same time, the DP token is tradable for mine tokens at any point of time. This fee requirement helps in preventing users from basically gaming the system. Now, for all the projects that launch via the Pylon treasury swaps or the Pylon pools, are strongly recommended to airdrop a portion of their tokens allocation to mine stakers. And these airdrops are vest linearly over a time period. This is a good incentive. Now, very similar to the Pylon pools, there's also 20% of all the yields generated in the fund accumulates to the Pylon treasury. Now, immediately after the Gateway Fund launch, the team is exploring other type of lossless pools on the Pylon Gateway. In fact, there are also other kinds of DAOs that are also emerging. Now, for the Gateway Fund 2, what the intention is, they want to look at a war chest of assets that are considered integral to the Terra ecosystem, including the Luna token or any other token within the ecosystem. They also proposing an NFT fund wherein they could collectively bid on the rarest NFTs and other unique digital asset primitives on the Terra ecosystem. These NFTs can also later be fractionalized as tokens for holders to own it. They are also looking at a lottery fund where they're trying to pull in and distribute yields to a random wallet or even to a smaller set of wallets every week or a monthly basis. They're also looking at something for a builders fund or for the content creators. Even also looking at special purpose funds, which basically they are drawing an inspiration from the Constitution DAO and the Pleaser DAO, wherein the users can set up new funds around lossless crowdfunding with any shared collective purpose. There are different interesting DAOs that are coming up. Here's a tweet from Ryan Lyon, who is talking about how GT Capital is looking at building a VC community by allowing retail users access to early investments in Terra projects through a Goblin fund, which is to be launched in a very similar manner like the Gateway Fund. Basically, it allows different community members to specific kind of venture DAOs in a lossless way. So overall, we can see that by pivoting to a new model like the Gateway Fund, it will help Pylon Protocol in having a focus which is more long term and at the same time helps them in scaling over time. If you find this video informative, please like, share, and subscribe.